Hey, John Mayfield with Global Real Estate School. Thanks for joining. And I am really happy that I have Kelly Jaunet Jones,
Yes.
who's with Leaders Credit Union here in Memphis. And some of you following me know I've been in Memphis the last couple of days because I've been posting videos from here. And Kelly, we've been talking about financing for my new real estate school students. And Kelly was talking about buy downs, and I thought, I got to get her on a video to talk about this. My first question, though, Kelly, because I have students all over, does your credit union require people to be in Memphis, or could you work with anyone from anywhere?
I can work with anyone from all 50 states. So being with a credit union, that is one of our benefits.
And it's really cool because I'm a member of a credit union, and so wherever there's a credit union, I can go and make a deposit or withdraw money, and they're all kind of a network, which is kind of cool. And I'm noticing there's a light behind my head, but that's okay. We have fun, but we've been talking about financing package mortgages, conventional ARM, adjustable rate, reverse annuity mortgage, because that's been on the test. But you have a really unique program on buy downs, and I'd love for you to tell everybody how that works.
Well, I'd love to say that it's just me, but actually any of your lenders can do that if you're doing a secondary market loan, which means conventional FHA, VA, USDA, some of those. Now they all have their particular restrictions, and so does every investor. But what I like to talk about is with temporary buy downs. If you're a realtor in the last few years, you've been beaten to death by temporary buy downs and talking about temporary buy downs because it's a way to reduce your interest rate because interest rates are high. But what I like to educate not only buyers and sellers on is it providing a win-win for each one of the members of the transaction. So what I mean by that is that when you have a seller who wants to keep a certain sales price, and so does the neighborhood also, but you have a buyer who's battling these high interest rates, and what do they want to do? They just want to reduce their monthly payment.
Exactly.
Just enough so that, we can all refinance in a couple of years. Well, a temporary buy down is perfect for that. So what a temporary...
And let me stop you real quick there, because a lot of the people who watch are Global Real Estate School students. And by the way, you got to find a good loan officer to work with, somebody you can trust and is dependable. And I've met Kelly here at Memphis, and I'm telling you what, she not only sponsored our event, but she's been here all day learning with us.
I love to. It's my favorite.
But like a buy down, does that mean if I have someone who wants to buy a home and interest rates are 7% or 8%, you're saying they can lower that interest rate?
They can.
Or have the seller do that for them?
So the seller has to bring funds for the temporary buy down, unfortunately. It has to come from the seller. That's why it's a great negotiation tool.
But Kelly brought up a great point, is that sometimes there are sellers out there who are thinking about dropping their price $10,000 when they could, instead of dropping the price, buy the rate down for your buyer, which is a win-win for everybody. The buyer gets a lower price, and the seller was going to drop their price anyway. So.
Right, but they get to keep their price with this point. I just did a social media post on this, so I have some actual arithmetic for you. But let's say you have a $375,000 house. Okay, and you have a buyer with a 7.25 interest rate. Well, if the seller reduces the sales price by $1,000, the buyer only really saves about $76. But if the seller gives $10,000, keeps their $375 sales price, and offers that in a 2-1 buy down, meaning in the first year that gets a 5.25 interest rate for the buyer.
Okay.
In year 2, that gets a 1% decrease, so a 6.25 interest rate deduction for the buyer. That means that buyer overall is saving at the start $555 per month in the first year. That makes all the difference.
And here's what will happen. You, as a new agent, just sold a home to a buyer, reduced their monthly payment. In 2 years, trust me, rates come back down, they're going to have more spending power. They're going to probably want you to list their home and buy another home.
Exactly.
And so they got in this for a 2-year period with lower payments, and they're going to build up equity in their home, and now they're going to list their home with you. you're going to sell them another home. Hopefully rates are down. So it's a win-win
Right.
for everybody.
And also, for if for any reason they decide not to sell the house, but they do want to refinance it, and it's before all of their money is used for this interest rate buy down, they keep that money because it's in escrow. So as opposed to doing a permanent buy down where the money is gone, this temporary buy down funds stay in escrow and they can use it for principal reduction or anything like that.
Interesting. So now I have one more question, and the other I want to tell them, because you have a really cool app that they can download, and we'll make sure your contact information is below the video. But Kelly's got a cool app you can download that'll do all this mathematics for you. But we've been talking on the podcast, my YouTube videos, and this last week I did discount points, and on the test I always tell them 1 point equals 1% of the loan amount. Is the buy down the similar way, or
buy down is so much more? So at the same price that you can, I wouldn't say the same price, but your money stretches more. So reduction in price per dollar amount spent is huge. To get a 2% temporary buy down, it might not even be allowed because of tolerances for costs and things like that. So that's what I tell a lot of buyers, like, even if you did put down $8,000, $10,000 towards your permanent buy down, it might not pass compliance, and that money is gone. So if you're going to refi in 3 years, you're not going to get that money and that savings back. Sometimes if you're going to put down that much money, you might not have a break-even point for like 7 to 10 years.
Okay. Interesting.
So,
and you also said not every lender does some of these, so you need to really be sure.
Yeah, so it depends. Not every investor. So when you
investor,
yes, when every investor. So when you're talking about investors, that means who's providing that rate. When you do a secondary market loan, so a loan that will be sold to an investor, New Res, Planet Home, PennyMac, things like that. Not every one of those investors will allow a 3-2-1 buy down, a 2-1 buy down, a 1-1 buy down. So you have to make sure you specifically talk with your lender so that you understand that it's the right price, it's the right rate, and it's the right amount, because it's to the penny how much you need.
Great. Thank you so much, Kelly.
You're welcome.
And, remember, as I mentioned in the course, you have to think of financing like I say, think of it as an ice cream shop with all of these different flavors of ice cream, because you're going to have a buyer that wants to get in a home, and Kelly is going to be able to look at the whole picture and say, here's what I would suggest. Sometimes it might be rural development, sometimes it might be VA, sometimes it might be this route with buying down the loan, but we'll have her information. Thank you so much. Don't forget a buy down. We talked about it briefly, and it's in your course. The good news is I don't think they will see anything on a buy down on the test. I don't think. But you're going to need something like this to make money after you get your license. So don't forget globalrealestateschool.com. We've got some great flashcards, prep material, and we'd love to have you as a student as well. And I'll have Kelly's information. It doesn't matter what state you're in, she can help you out, and we'll do VA. It's been very knowledgeable, and I can tell you I would feel comfortable with my buyers working with her and knowing that they would get it done. So have a great day, everyone.
Bye.
Thanks. Bye.